Hi everyone, welcome back. This lesson will discuss various advanced charting techniques for trading. Here's an overview of the lesson. We'll first introduce Heikin Ashi candlesticks and how to best utilize them, talking about various uses and the implementation of Heikin Ashi candlesticks, Heikin Ashi candlesticks versus regular candlesticks, and the Heikin Ashi formulas that make up the difference between those style of candlesticks and regular candlesticks. We'll also discuss Fibonacci levels, including what the Fibonacci sequence is, how to use the retracement tool and its proper placement, and various strategies using Fibonacci retracement for trade entries and trade exits. Let's first start off with Heikin Ashi candles. So the Heikin Ashi candlestick is a charting system. It displays similar data to regular Japanese candlestick charts, but uses formulas to display average price movement over a given time period. Now it's similar to simple moving averages. The main objective of a Heikin Ashi candle is to smoothen out price volatility and display the average price of a candle and its relation to candles near it. Heikin Ashi literally means average bar in Japanese, and it can be combined with candlestick charts to identify market trends, market bottoms or tops, and to predict price movement over a given period of time. It's important to keep in mind that most profits when trading are generated when markets are trending, so being able to identify trends correctly is extremely beneficial. So to recap, here we have our basic example of basic candlesticks, basic Japanese candlesticks. We have our bullish candle, green. This is indicating that price went higher during this time period. The bottom portion of the body is our opening price. The top portion of the body is our closing price. We have a lower wick indicating the lowest price of the trading session and the highest price or the highest price of that particular trading session. And on the opposite end of things, we have our bearish candle, the red candle, where we have the top portion of the body indicating the opening price, the bottom portion of the body indicating the close price, and then we have our highest price of the time period as the high wick, and then the lowest price of the time period as our low wick. Now, shifting over to TradingView, here we see this is the Bitcoin chart, the daily chart, and this is just regular candlesticks. Now, if I wanted to have a better idea of what's going on throughout this pattern, throughout the course of Bitcoin's trajectory here, this price action, we see these green candles, we see these red candles, and there's a lot going on, right? And while it is important to see the specific information on that particular candle, what happened, sometimes when we're trying to look at the bigger picture of what's going on, regular candlesticks may not be as helpful. What we could do is in TradingView, you can click on this down arrow, and instead of selecting candles, you can go over to this bottom section and select Heikin Ashi. I actually have it saved, so it will always show up in this top menu for me. But if I click Heikin Ashi, now I have a fairly different perspective on the market. Switching back to regular candles, we see that this general shape, and particularly in 2021, with this overall downtrend, we produced these all-time highs. We came down to about 30K, produced a new all-time high in around November 2021, and then overall downtrend going into the new year of 2022. Generally, we see this red and green assortment of candles, and sometimes it can be overwhelming. It's too much information at sometimes. If I were to click on Heikin Ashi and switch over to Heikin Ashi, now I have a much clearer idea of the general trend, right? Does it really matter in these candles if it was turning red on these specific candles if the general trend or the general move is upwards? And that's really one of the strong points of Heikin Ashi, is that it smooths out the price data. It's showing you averages as opposed to the specific of what each and every candle did. We're seeing the overall general move, the overall general trend. We're seeing that this move was generally up, this move was generally up, this move generally down, right? We're starting to see these little bumps here and there, but generally this was a significant downtrend. And we see that even as far back as we want to on this Bitcoin chart, and it helps smooth out price data and give the trader a quick way to identify general trends. Now, swapping back to some various examples, here we see a side-by-side comparison. This is Ethereum to US dollar. This is 1 hour chart. Same thing here. The top section is the candlestick chart. The bottom section is the Heikin Ashi. And we see generally the shape remains the same. We're seeing the same trajectory, overall general trajectory of price, but now with Heikin Ashi, we're starting to see differences. We're starting to see the general average price and the general market movement for the general swing or the general trend. Here we see these various red candles. On the Heikin Ashi, we see a much clearer green trend. Here we see these various green candles and this general downtrend on this 1 hour, whereas with the Heikin Ashi, we generally see that the average price was declining. And it depends on what you're looking for in terms of analysis. Sometimes looking at just the averages can be helpful for a trend identification. Same thing here. This is the Bitcoin. This is the daily chart. The top section is the candlestick chart. The Heikin Ashi is on the bottom. And we generally see, instead of seeing all these various red candles, we're seeing a much cleaner identification of the trend and the overall move of the market. So one of the key differences between candle charts and Heikin Ashi charts is that the Heikin Ashi chart calculates an average of the price action for that specific period or that specific candle. Heikin Ashi candles tend to stay one color during trends, where Heikin Ashi candles will stay red during a downtrend and green during an uptrend. Normal candle charts can alternate color even if price is moving in one overall direction. This is really where one of the big differences in how regular candlesticks and Heikin Ashi candlesticks will display information. Now, Heikin Ashi charts calculate averages, so the current price on a Heikin Ashi candle may not match the price that the asset is actually trading at. Many charting platforms such as TradingView will show two prices on the y-axis to show the current price and the current average price. And here's an example of this. So here is Bitcoin on the US dollar. This is the daily chart. We see this general downtrend, right? This generally red candles dominating this move downwards. And we do see some levels of retracements or relief rallies, if you will, where price is coming back up. But the general trend is down in this particular situation. Looking on the right side, typically we would only see one box on the right side showing the current price. Because Heikin Ashi is based on averages, we see two boxes here. We see the current average price of $39,398, indicated right here, whereas the actual current price was actually $41,069 at that specific time. So the actual price was around here, but because Heikin Ashi is foregoing the current price in favor for averages, we're seeing the average price of the particular candle was about 39,000, and we are seeing that displayed as well. So something to keep in mind if you are going to utilize Heikin Ashi candles.